Good afternoon, ladies and gentlemen. My name is Rokni Mogoti. I'm here with my colleagues doing our presentation looking at Botswana Telecommunication Corporation financial performance for the year 2023 and 2022. In our group, we are four. I have Mr. Maitsegon Tshwarang, Maipilo Bathokebafe, and Victoria Senzu. Ladies and gentlemen, our presentation is segmented like this. We have our introduction, which is going to be done by myself, Rokni Mogoti, and then we have the liquidity. We have the analysis of ratios. Firstly, we looked at liquidity and working capital, which is going to be done by Victoria Simon. We went on by looking at efficiency and investment ratio, which is going to be done by Maitsegon Tshwarang. And lastly, we have SWOT analysis and recommendations and conclusion, which is going to be done by Maipilo Bathokebafe. Ladies and gentlemen, as I've just said, Botswana Telecommunication Limited is a converged telecom provider that offers fixed mobile and broadband services to individual businesses and authorized service providers. Ladies and gentlemen, this company was established in 1980 and currently has a headcount of 819 employees. The Botswana Telecommunication Corporation, it operates and manages national and international communication services in Botswana. It has its competitors being Mascom Wireless and Orange Botswana. Ladies and gentlemen, the company has a total revenue of 1.4 billion in 2023 versus 1.39 billion in 2022, and with total assets of 3.4 in 2023 and 2.9 in 2022. Ladies and gentlemen, in market share, as we can see in our presentation, Botswana Telecommunication Corporation is the one which have a limited market share with 17%, and then Orange Botswana with 38%, and lastly Mascom with 45%. As I've just said, ladies and gentlemen, in this assignment, the team intends to analyze full financial report for 2022 and 2023, which has been extracted from the published integrated report of 2023, which runs from April to March using the following ratios. In our profitability ratios, we are focusing on return on capital employed. And then secondly, we look at liquidity ratios, and then we are focusing on current ratio and gearing ratio. Thirdly, we look at efficiency ratio, focusing on fixed assets and turnover ratio. And then working capital, we are looking at in working capital ratios, we look at accounts receivable and accounts payable. And lastly, investment ratio, and then we are looking more into end per share ratio, EPS. Ladies and gentlemen, in our profitability ratios, as I've just said, we were looking at return on capital employed. That's the one of the ratio which we picked under profitability ratio. This profitability ratio, ladies and gentlemen, it used to determine the success of the company. The ratio of ROS is used to determine how a company uses its money to generate its returns. And then when we are comparing this or analyzing this ratio, we look at the return on capital. And then for us to be able to, as we know that this formula is for ROS is operating profit over capital employed times 100. So firstly, we analyzed our capital employed, and then our capital employed is equals to total asset minus total current liabilities. And then after the calculation of this, ladies and gentlemen, Our ROS for 2022 became 7.04. And then our ROS for 2023 was 5.59. This translates a decline. And then when we analyze this, we said the ratio declined in 2023, despite increasing profit, but they did not increase in relation to capital employed. Ladies and gentlemen, that's far I can go for with my presentation. I will now hand over to my colleague, which is Victoria Simon, who's going to look at liquidity and working capital ratios. With that, ladies and gentlemen, I thank you for listening. Thank you.
Thank you so much, Mohotse. My name is Victoria Sinto Simon. I'll be taking you through the liquidity ratio. On this particular ratio, the ratio measures the ability of the business to meet the payment obligations by comparing what it owes versus what it has monetary. Under the liquidity ratio, we will be analyzing the current ratio, as it's more important to every business to compare its current assets versus its current liabilities to understand its financial position. And in our analysis, we saw a slight variation between the BTC financial year 2023 and 2022. 2022 being 2.1, whereas 2023 was 2.3. This therefore highlights that the business is doing quite well in its capacity. It is utilizing its assets and it's able to settle its debts at an agreed period of time or at agreed terms. Next, please. Ramogotse, working capital. Yes, so then we'll take you through the working capital. On this working capital efficiency ratio, we'll focus on, no, that's not the right slide. Yes. Back again to the account. There, that's the one. Sorry about that. And then I'll be taking you through the working capital ratios. Under working capital ratios, we have the accounts receivables and the accounts are payable. Firstly, account receivable is a key aspect in working capital management of all businesses. It calculates the number of days a business is paid by its clients or its associates. In our case, BTC is paid within 98 days, whereas with the accounts payable, it calculates the number of days a business takes to pay its suppliers. And as for BTC, it takes at about 176 days to pay back its debts. The analysis is that BTC takes quite a long time to pay its principals, whereas it's paid on time. This on its own could work to their advantage should they take the same funds that they have to invest it in maybe a different project going forward. Thank you so much. I will be handing over to my colleague, Maitseho.
Thank you, Ms. Simon. I will now take you through my presentation, which is I will be looking at the efficiency ratios. So from our end, we realized that we used, for the efficiency ratios, we used the fixed assets turnover ratio, as well as the working capital turnover ratio. Firstly, we said the efficiency ratio basically is used to assess how efficient the company utilizes its resources. That is how the company best uses the assets that it has to generate sales. And we say the fixed asset turnover basically is the total sales revenue over the the fixed asset at net value. Basically, the fixed assets turnover looks at, it measures the company's capability to use the assets that it has, that is the fixed assets, to generate sales. And we realized on our analysis, we realized that for the 22 year, for the year 2022 and for the year 2023, basically the fixed asset turnover was constant. It was at 0.64, which demonstrates the stability in the use of the business asset. That is to say, BTC is able to constantly use its resources without maybe it is not necessarily going down. And we believe that with the such stability, measures can be taken to go forward and improve how the company uses its assets. The next efficiency ratio is the working capital turnover ratio. This ratio, it shows the relationship between cost of goods sold and the net working capital for the year. Basically, this one, it shows the relationship, but it also determines the efficiency of the working capital utilized to generate sales. And we say the working capital basically is the amount of cash that or the current assets that a business has after maybe its current liabilities are accounted for. That is, if after the assets minus the current liabilities, that is what you have, and that is the working capital. So the working capital formula basically is working capital turnover over which is equals to total sales revenue divided by the working capital. And for you to get the working capital, you have to take current liabilities from the current assets. So in 2022, we realized that the current the working capital turnover was 3.31 against the 2.91, which was for 2023, meaning that we have a decrease in utilization of working capital to gain the sales that we have. And we realized that this is because of the restructuring of the company that occurred, as well as the costs that were incurred maintaining and restoring copper cables that were stolen, that resulted due to theft. Then we have the investment ratio, and amongst the investment ratio, we looked at the earnings per share, and earnings per share ratio basically assesses the effectiveness of business management in developing dividend payment policies. Basically, the EPS it has a critical information in making estimates of the amount of dividends per share and the next level of share prices, and it assesses the effectiveness of the business management in developing dividend payment policies. So that's how critical the investment, the earnings per share ratio is. It also determines the efficiency of working. In 2022, we realized that we also had a higher earnings per share as compared to earnings per share, and with this shares showing a decline, the company can the company can lead us, or it can scare investors into thinking maybe that the company is going down. But it's good that when we analyze this, we look at the things that could have led to having those per share, earnings per share going down. And we are saying, despite this that does not necessarily mean the company is going down. Looking at the fact that in 2022 and 2023, the company had long-term investment that could earn it a lot of revenue in future, like the data center, the Central data center, enrolling FTTH, which we believe it will enroll more customers and improve its shares. With that, that's it from my side. I will hand over to my bill. Thank you.
Thank you, Maitaha. Good afternoon, ladies and gentlemen. My name is Maipelo Batukebafi, as mentioned in the introduction, and I'll be taking you through the final points of our presentation, which are the ratio comparison, the SWOT analysis, the recommendation, and the conclusion. Now, the ratio comparison, we've made it on the profitability and liquidity ratio. We've also made our comparison using the efficiency and liquidity ratio. Now, the comparison of the profitability and the liquidity ratio was done based on the ROS and the gearing ratio. And we came to a conclusion that the business is utilizing its shareholder equity. Now, on the comparison of efficiency ratio and the liquidity ratio, the company has a positive working capital, given that it has more current assets than the current liability. This gives the company the opportunity to increase its revenue over the time. Now, when it comes to the SWOT analysis, our strength is that the strength for the company is that it can efficiently utilize its assets. And the weakness for the company is that it's failing to utilize the debts to increase the revenue. And then on the opportunities, there is that revenue growth. And the threats for the company is that there are new entrants into the market, and it might be losing its market to existing competitors. When it comes to the recommendation and the conclusion, our recommendation is that we recommend the BTC to utilize its assets and debts to maximize the revenue in future. This will enable it to attract new investors, increasing its earnings per share, and as a result, increasing its market share. As we have seen in the introduction, that BTC has the lowest market share among its competitors. And in the conclusion, we have come to the conclusion that the business is well oriented with the great ethics. And ladies and gentlemen, that was the last part of our presentation. I thank you.
Thank you, Tim. I believe with that, then we can have questions if there are any questions.
Thank you, ladies and gentlemen, for the excellent presentation. I have a question here. My question is that why Thank you, Mr. Maitero. I do have a question. Why is liquidity important for the performance of the company?
Thank you for the question, Metsia Motuping. I will just shortly answer you by saying liquidity ratios determines the organization's ability to pay its debt in a shorter period of time. For a company to be viable, there have to be a cash flow. So the company, for us to make it viable in the market, it has to pay its debt in a very shorter period of time. Also, the liquidity performance measures the ability to meet financial obligation as they fall due. I think I've answered you. Thank you.
Thank you so much.
Okay. First of all, let me thank you, team, for your well, synchronized presentation. It was straight to the point and covered so many points at the same time. I do have a question as well. My question is, what can you recommend, as part of your recommendations, what can you recommend BTC to implement or improve in order to increase its market share? Thank you.
Thank you, sir. Thank you for the question. I believe that's a fair question. Looking at the fact that we saw even on the report that BTC's market shares is actually the smallest share, but we believe and we think that BTC, through their long-term investments like the Centara data center, we believe that they can venture into new products, offer X as a service to their customers to reach and gain more customers, get more market share. They can use that to get, like services like a cloud as a service, a software as a service. And we believe that as time goes on and they reach the market, we believe that they can improve their market share. Also, is with regard to FTTX. They have recently embarked on FTTX, and we believe that with the FTTX, by offering FTTH, FTTB, FTTC, they will be in a position to reduce that likelihood of getting cables, the copper cables being stolen and having to spend more on restoring the service, because we realized that part of the revenue was used not only on the administrative, not only on the administration, but it was also used on restoring these services, and as well as having to pay or having to basically pay their customers because of failed services. So if they engage more on FTTX, this revenue can be used to increase their market share. Thank you, sir.
In addition to that, I think it's also quite important that BTC also benchmarks from its competitors to try by all means to increase their market share. Also at the same time, by being innovative, by coming up with other new systems or improving the existing systems that its competitors are actually running with. I think that's also another way in which they can also increase in terms of also on their revenues. Thank you.
Thank you.
Okay, thank you, Tim. Without questions, I believe that's the end of our presentation. Thank you, Tim.
Thank you.